Hey, welcome back to the Calm Investor channel. If it's your first time here, this is the Calm Investor channel, where we try to stay level-headed, ignore the noise, and focus on long-term, steady growth. I'm not really into shorting stocks or chasing quick wins every day. After a lot of trial and error and some painful losses, I realized I care more about keeping my money safe and growing steadily over time. That said, sometimes a clear opportunity comes along, something that just makes sense and looks like an easy win in my eyes. This time, I want to talk about Coca-Cola. Back in November 2024, the stock price dropped way more than I thought it should, all the way down to 61.98. That looked like a solid chance to buy, considering the reasons behind the drop didn't seem too serious to me. So what happened? Why did Coca-Cola's stock fall like that? There were several factors. First, the company reported a 1% decline in revenue for the third quarter of 2024, with unit sales dropping by about 1%. They had increased prices by around 10%, which boosted revenue but caused some drop in volume. It looked like consumers were reacting to those price hikes. On top of that, Coca-Cola faced some macroeconomic pressures. Low consumer confidence in big markets like China, plus geopolitical and economic challenges in regions like Eurasia and the Middle East. Lastly, the stock was trading at a pretty high price-to-earnings ratio, around 28 times earnings, which made it vulnerable to corrections, especially if growth slowed down. All these things together pushed the price down in that period. But honestly, none of these reasons made me think Coca-Cola wouldn't bounce back. This is Coca-Cola we're talking about. A massive company, one of the most recognizable brands in the world, dominating the soft drinks market for decades. I saw the drop as an opportunity to beat the average annual return of the S&P 500, which I personally invest in, and has averaged about 10% over the years. Fast forward to today, May 15th, 2025, I decided to sell my shares, making a profit of 11.89% in 6 months. Sure, I could have probably sold earlier and made a bit more, maybe around 17% if I was quicker, but I was a bit stubborn and wanted a little extra. That's my story with Coca-Cola. Just a heads up though, I'm not a financial advisor. I don't give advice here. I'm simply sharing the moves I make with my own money. Don't copy what I do blindly. I take risks that affect only me. Now, a bit more about why I don't like shorting stocks. Short selling feels like betting against companies or the market itself, and honestly, it's stressful. I've seen a lot of traders burn out from trying to time the market or make quick profits on dips. For me, investing is about patience and trust in good businesses over time. I'd rather focus on companies with solid fundamentals that I believe will grow steadily, instead of jumping on short-term hype. Coca-Cola fits that mindset perfectly. It's a company with a huge moat, brand loyalty, global distribution, and consistent cash flow. Even when the market shakes, companies like Coca-Cola tend to bounce back because their products are staples people rely on. When I evaluate a stock, I look beyond short-term news or market noise. I dig into the business model, competitive advantages, management quality, and long-term trends. With Coca-Cola, despite the small hiccups in sales or market pressures, the core business remains strong. People still drink Coke, Sprite, Fanta, and all their other products every day worldwide. That's why I felt confident buying when the price dipped. Let me also talk about how I manage risk. I don't put all my money into one stock or sector. Diversification is key. I spread my investments across index funds, stable blue chip stocks like Coca-Cola, and a small portion into higher risk opportunities. This way, if one investment goes south, it doesn't wreck my entire portfolio. Plus, I always keep an emergency fund separate from my investments. That helps me avoid panic selling if the market takes a dive. Another thing I pay attention to is the broader economy. For example, in late 2024, consumer confidence was low in some markets due to inflation concerns and geopolitical tensions. That often creates short-term volatility in stocks. But long-term, markets usually recover and grow as economies adapt and improve. That's why I try not to get caught up in daily headlines or fear-based selling. Instead, I focus on what I can control: my savings rate, portfolio allocation, and sticking to my plan. And now, for those of you watching who might be newer to investing, I want to emphasize this isn't a quick path to get rich overnight. It's about building wealth slowly and steadily, with discipline and patience. Sometimes that means sitting through periods where your portfolio doesn't move much or even dips. And yes, it can be frustrating at times. But when you pick solid companies and hold for the long haul, the results tend to be rewarding. In summary, my Coca-Cola investment was a nice win, but it's part of a bigger approach I take to investing: cautious, calm, and focused on long-term growth. If you like this video, please give it a thumbs up and don't forget to subscribe to the Calm Investor channel. It really helps me keep creating content like this. Thanks again for watching, stay calm, and I'll see you in the next video.